In late November 2023, GM announced a $10 billion accelerated share repurchase program. A lot of those shares have already been bought back. The company announced in its second quarter earnings that 18% of shares have been retired over the past year. But we got some insight into the details behind those buybacks, exactly how many shares are outstanding right now, and then the pace of potential buybacks in the future. It's probably not likely that we're going to get an increase in that share repurchase program of about $6 billion that was added about a month ago. But there is still plenty of runway to buy back shares. So I want to go through exactly how much and how quickly GM is buying back stock, because it seems like this is going to be a strategy that they're going to deploy as long as shares are trading for about 5 times earnings. Just an incredibly cheap price if you're able to buy back stock at that price. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. I want to start this with a chart that shows exactly what kind of progress GM has made over the past year or so. This is GM's free cash flow in light blue, the repurchases of stock in dark blue, and then the weighted average shares outstanding is the orange line. These are all trailing 12-month numbers. So this goes back about 2 years. This does not include the second quarter 2024 numbers. Those have not quite been updated yet by FinChat as the time that I'm recording. But you can see that share count is dropping really rapidly as the company uses more and more of its free cash flow to buy back stock. And on the conference call, CFO Paul Jacobson gave some insights into how much they've been buying back recently and what that should look like in the future. I'm going to put some of these quotes up on the screen. On a capital allocation, we repurchased $1 billion of stock in the quarter, that meaning the second quarter, retiring another 22 million shares. And in early July, completed the prior $5 billion stock authorization. And the fully diluted share count was 1.14 billion at the end of the quarter. So that chart that I showed a little bit earlier showed 1.31 billion shares outstanding. That is actually the weighted average shares outstanding for the period. So that's why as they buy back shares throughout the quarter, the number of shares actually outstanding on a specific date at the end of the quarter is going to be lower than the weighted average for the quarter. So that was a reduction of 18% from a year ago. And then he goes on to give a little bit more detail into the way that this is working. The next part of these comments was the open market repurchase supplement, ongoing with the $10 billion ASR, is projected to be completed in the fourth quarter. That will bring the share count down to about 1.1 billion shares outstanding, and goes into a little bit of detail. They paid $10 billion up front in December. That was in 2023 to retire 215 million shares, but banks are actually completing that over a little bit longer period of time. So they said that in the second quarter, no additional shares were retired under the ASR as the banks continue to cover their positions in the 215 million shares they borrow at the outset of the program. So a little bit of wonky details there. But they do say that they expect to retire another 20 to 30 million shares, bringing the total shares retired under the ASR to 250 million. And then in addition to that, there's another $6 billion share repurchase authorization. And that is what they expect to get the company under about 1 billion shares outstanding. So just a really rapid rate of share repurchases. And I want to go through exactly how they're doing this from a balance sheet perspective, because I think it's pretty easy to say, you know what, GM has a ton of debt. So why are they buying back stock when they have that much debt on the balance sheet? Why don't they just pay down debt? That's not really true. They don't have all that much debt on the balance sheet. So I want to get into those numbers as well. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. This is a look at the balance sheet as of the second quarter, so June 30th. So as of June 30th, 2024, and you can see that they're broken out really into 3 different segments: automotive, cruise, and then GM Financial. The reason that they do this is these are really distinct businesses. Cruise has its own capital structure. They are consolidated under General Motors, but it is technically a separate business. Same thing for GM Financial, and that operates more like a bank. So that really plays out when you start looking at the balance sheet. You can see here that there's about $22 billion worth of cash on the balance sheet in the automotive segment. This is going to be kind of the main business, and GM Financial is actually going to pay a dividend to the automotive business. So this is going to be kind of like the mothership. And then if you go down here to debt, long-term debt for the auto business is only $15.4 billion. So that's not a lot of debt for a company that's generating somewhere around $10 billion in free cash flow this year. Most of the debt if you see some of the headline numbers, is housed under GM Financial, and GM Financial is making loans to customers. So they're going to borrow money to then loan out to customers and try to make a little bit of a profit there. That's how GM Financial makes money. That's how banks make money. No real surprise there. And that's why they have a huge number of receivables and operating leases, GM Financial receivables. These are the assets that are on the balance sheet offsetting the debt that's outstanding for GM Financial. So the core business actually sitting in pretty good shape, has a net cash position when you add the cash that's on the balance sheet and then subtract the automotive debt. There is a little over $10 billion in also pension obligations, so something also to keep in mind. But the balance sheet is capable of buying back more stock, and as they continue to generate cash, that's what management has chosen to do, is just buy back that stock at right around $5, at right around 5 times earnings. So this is ultimately the bullish case for General Motors, is they just continue to generate cash. The market continues to not really push the stock any higher, and management is just going to continue doing that. And there doesn't seem to be any indication that management is going to slow down those buybacks. So I think this is ultimately one of the biggest bullish signs for General Motors. And then when you think about the stability of the business, they have actually been raising prices throughout 2024. Now, management said that there's going to likely be some price reductions in the second half of this year. That's what they're modeling. That's why their guidance wasn't raised even more than it was during the second quarter. And I think one of the reasons the business is doing so well is GM is one of the few companies that is really dominant in trucks and SUVs, and newcomers are not investing in ICE trucks and SUVs, but that's still where most of the profit in the auto industry is made today. So GM is sitting in a really good position. They have a very, very low valuation, so management can use the cash that the business is generating to buy back stock, and that cash continues to come because they are the leader in trucks and SUVs, the most profitable segment of the market. So as all these EV companies see their margins decimated, they have negative free cash flow, they have to keep going back to the market to raise funds, GM is in the opposite position. They can actually return cash to shareholders through these buyback programs. And I think the stock reaction on Tuesday after earnings were announced was a little bit wild because management could get really aggressive with that $6 billion share buyback authorization and buyback shares at this much lower price now that it has on Tuesday after earnings. So it'll be interesting to see what they do over the next few quarters, but I think GM's sitting in a really good position. It's just a matter of how long is it going to take for the market to realize that this is a cash flow machine, that these buybacks are going to continue, and ultimately I think the share price is going to have to move higher, or there's just not going to be any stock outstanding left. And I've heard some investors say that as well. Maybe I'll be the last shareholder left of General Motors. But let me know what you think about GM and its buybacks. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.